Hey guys, welcome back to the course here. We're going to shift gears a little bit in the project life cycle. We've gone through, creating the job, creating the estimate, performing, generating your progress invoice and receiving payment for that. Now we're going to shift a little bit different here to the expense side of things. And before I get into the details here, I just want to give a little bit of a background on the expense side of the different types of costs you're going to incur as a business and specifically in the construction industry. So I'm just going to pull open the chart of accounts here and show you all. So typically you're going to have two types of expenses. You're going to have direct expense and you're going to have indirect or overhead expenses. So your direct expenses are going to be your cost of goods sold. So what we have here is our cost of goods sold account, and then along with that we have sub accounts as in job related equipment, job related labor, material, subcontractor costs. So it's pretty straightforward. I mean, your direct expenses are going to be anything that's directly related to the project that you're performing. Your overhead costs are going to be things like, as you can see down here, advertising, auto, bank charges, dues and subscriptions, any of these that you see down here, your office expenses, your rent, things like that. That's going to be your overhead. So that's the main thing you want to keep in mind as you do this. Your direct expenses are going to be recorded a little bit differently than your overhead expenses, and you want to make sure you know the difference between both of those. If you have any questions about that, feel free to reach out to us. We'd be happy to help you out. The other thing I want to talk about real quickly, if we go to this expenses side, there's a couple different types of expenses that you'll probably need to record as a company. So just looking at this drop down here, you have a few different options, and typically, the things that you're usually going to record are going to be your bills and expenses, and if you're writing checks, obviously checks. But we're gonna talk about the difference between a bill and an expense, because it's not necessarily clear in QuickBooks. So I just want to clear that up before we start. So a bill is going to be, anything that is purchased on an account. So let's say as a construction company, you go to a lumber supply company and you have an account set up there and you purchase a bulk order of lumber, then you're going to get an invoice for it with terms. Usually, you have 30 days to pay the invoice, and you're not paying for that up front. So they're going to send you an invoice for that. You record that invoice based on the date or when the service was performed, and that gets recorded. Hits your expense account in the month it was recorded, and then will be reflected as a liability and a payable on the balance sheet. And once that liability is paid, it'll be cleared off the balance sheet basically once you pay the invoice. Now an expense is a little bit different. An expense is going to be, something that directly hits your bank or credit card, directly, immediately. It's not an invoice that you're receiving. If you're swiping your credit card or your debit card, that's an expense. It's a immediate cash or credit impact on your account versus an invoice that you're receiving for something that you'll need to pay at a future date. So hopefully that makes sense, but I just wanted to run through that before we do the actual demo here.